Hello, welcome to the Redwoods Dowling Kerr Healthcare webinar, and thank you for taking the time to join us. My name is K Steen, and I am the Sales and Marketing Director for the Altius Group, the parent company behind Redwoods Dowling Kerr. Today I am joined by Murray Patt, founder of Alexander Knight Accountants, Matthew Scott, Head of Commercial Law, Vincents Solicitors, and also our very own Head of Healthcare, Michael Hatton. In today's 40-minute webinar, we will be discussing actions which can be taken to protect your business value and sale process during the COVID-19 crisis. We will also be discussing the recently announced government schemes which may offer support to your businesses. There is a question box at the bottom of your screen. If you have any questions, then please type them in the box and I will ask them to the panel later in the webinar. If you have any questions after the event, then please email webinar@redwoodsdk.com and I will forward on your questions to the appropriate person. So, COVID-19 is completely unprecedented, and hopefully the UK is now reaching the position where it is past the peak outbreak. The initial shock phase is over, and many are now reviewing the position which they find themselves in and their healthcare businesses. So with this in mind, Mike, if healthcare business owners are already on the market or they are considering selling in 2020, what actions can they take which will protect their business value?
Yes, thank you, and good morning, everybody. I think as far as preserving value is concerned, this is about being able to demonstrate that the business hasn't been adversely affected. And that's not to say it won't have been inconvenienced, of course, but I suppose this is about being able to evidence trading levels. There's no doubt that risk for a prospective lender will still be high on the agenda. So I guess they'll want to understand how a business's trading levels have been affected during the crisis, if at all. And secondly, they'll want to see evidence that turnover, occupancy, etc., have returned to pre-COVID levels. So I think that we'd strongly advise any healthcare business owner to make sure that, first and foremost, they're keeping accurate and appropriate records, being able to demonstrate business levels over this period, how they've changed. And I'm not just talking occupancy numbers, monthly management figures. For example, for a lender to get behind an acquisition, they'll want to see these up-to-date figures. Year ending 2019, they're just not going to be recent enough. So whilst it might be an additional expense, a small additional expense, it's going to be imperative. And I think what we'll see then is the ability to present a clear and attractive picture to a prospective buyer, which will mean in turn that a buyer can move forward more quickly with the transaction rather than having to wait for these to be produced. But most obviously, I suppose it will give the bank the assurance that it's an acquisition they can get behind. So accurate record keeping, and finally then have a clear and coherent recovery plan in place that demonstrates you're ready to implement this in the event of potentially a second wave.
And Mike, would you differentiate between homes that have had an outbreak of COVID-19 and homes that haven't?
Yes, I think we've seen probably, well, I can probably count on one hand the number of homes that we're dealing with that have had this, but I'm aware that there are others that have struggled with this massively. So it all comes back to the future outbreak plan that you've got. Understand that most of these homes will have appropriate measures in place to protect for norovirus, for example, already. So this is about, I suppose, ensuring that this is robust. And I guess from that perspective, we have to see, we have to be able to demonstrate that we've learned any lessons that are there to be learned. So, between the two, we're all in uncharted territory here. I think that protect your business with a robust plan and make sure that we can demonstrate this moving forward.
Okay, thanks for that. Turning to you now, Murray, the government has announced unprecedented support and stimulus packages to the UK economy and the SME business community. Please, would you give an overview of the packages which are most relevant to the healthcare sector?
Sure, thanks Andrew, and thanks very much for allowing me to join you this morning. First thing I would say is that this is a very, very challenging time for all businesses and all business owners, and therefore you have to take advantage and you have to try to take whatever the government have on offer for you and try and get out the other side of this hell. That's the first point. Now, the government support that's on offer, I'll go through the main areas which certainly I get involved with as an accountant, but there are some other areas as well. But the things that we've helped our clients with and seen a lot of are, first of all, the job retention scheme, also known as furlough. So this is a scheme whereby rather than laying staff off or making staff redundant, the government will contribute up to 80% of an employee's pay. So there's an opportunity if people are unable to work for them to still be retained by the business and perhaps accept a pay reduction. Obviously, there are legal implications associated with that, but if that's accepted, then the government are basically paying for that person to be retained by the business rather than lose their job. The claims that we've made on behalf of our clients have all been successful, and the monies have actually been paid through direct to clients within about 7 days of the actual initial claim being made. So the system is working. It's the furlough portal was up and running last Monday. It's all working. The money's being paid through, and I've got to say it's working quite well. However, the downside to it is that there are some, let's call it, peculiar or unusual rules associated with the scheme. The main one that I come across is that for somebody to be furloughed, they have to they cannot be available for work for 3 consecutive weeks. So it means that business owners need to think about who to furlough and when to furlough them to ensure that they meet the 3 consecutive weeks criteria and therefore can claim back their salary cost. So furlough is working quite well. There are a number of other areas of interest. The first thing I'll do now is I'll give everybody a telephone number for an HMRC coronavirus helpline, which is 0800 024 1222. Now that number is really useful because if you speak to HMRC, you will potentially be able to defer your corporation tax liability, especially if that's due around now. You'll be able to potentially defer your PAYE and NI liability. And again, this is all about hanging on to your cash, getting through the other side of this hell. So make use of that number and get HMRC's agreement to deferring those, let's call it those crown liabilities. In addition to that, there are 2 loan schemes that are available. One that's been kind of up and running for a few weeks now, and one that was announced at the start of the week. The business interruption loan scheme is the one that's been around for a few weeks, and there's been some good and bad press associated with that. But essentially, it's a scheme whereby the banks with government backing, up to 80%, are there to help businesses that have suffered a downturn in, let's say, their trading position as a result of the pandemic. And again, depending on the bank, some banks are better than others at making funds available and supporting their clients. But again, it's a scheme that business owners should look at very, very closely. Another loan scheme was announced at the start of the week called a bounce back loan scheme. And this is a more simple version of the business interruption scheme. And essentially the way it is going to work, and I'll caveat it now by saying further details haven't really been released, but it's supposed to be up and running come next Monday. But the way that scheme is going to work is that maximum loan is £50,000. There are no guarantees associated with that. It's 100% backed by the government, and it is supposed to be a very, very, very simple process from making a claim to receiving the money. So again, for lots of businesses in the healthcare sector, that could be a loan that's of interest, given that perhaps some of our viewers may operate through a number of limited companies, and each care home could be in a separate limited company, and therefore it could be a loan per limited company rather than per group. But we'll just have to wait and see. And again, I'll say, please, everybody, take advantage and look to make use of the support that's available from the government, because you need to get out the other side of this. Yes, as Mike's already highlighted, management information and knowing your trading position is really important in terms of trying to maximise value when it comes to a sale. But actually, you need to get out the other side of this, and therefore, in addition to your management information, you should be putting together a weekly a cash flow model that highlights on a weekly basis your cash position, perhaps for the next 3 months, and operate that on a rolling basis.
Okay, thanks for that, Murray. On the furlough scheme, just how straightforward is the actual system that HMRC used to process the furlough applications?
For an accountant like me, yeah, it's fairly straightforward, I've got to say. But then again, I'm used to HMRC's systems and some of the things they do, which are a little bit unusual. I think one of the things is there's a common misconception with the furlough scheme, in that what business owners think that whatever they process through their payroll, let's say in the month of April, should tie in with the furlough claim that they make for the same month, and that is a misconception. That is not right. There may well be a correlation between your furlough claim and your April payroll, but the two may not be exact. So in terms of making a claim, I would encourage all business owners to talk to their accountants, talk to their advisors, because again, if I give the example of my firm, we have completed a large number of furlough claims for our clients, and every furlough claim we've completed has been paid out already. But again, that's probably because we're more adept at it and we know the rules. But again, I think it's important to take advantage of the opportunity.
Okay, thanks for that. Before the COVID-19 outbreak, the Chancellor of the Exchequer took an axe to the Entrepreneurs Tax Relief Scheme and reduced the lifetime limit from 10 million to £1 million, which makes a significant difference to the net gains a healthcare business owner will make upon sale. Do you think that the Entrepreneurs Tax Relief Scheme is in danger of being abolished entirely?
I'm not sure if abolished is the right word to use, but certainly I was surprised when they reduced the lifetime allowance down. I felt that was the wrong move. However, the world has changed since they made the change to the scheme, and therefore I think it's fair to say that one way or another, all the support the government are providing us with at the moment, they need to find a way of paying for that. So I suspect that we will all find that taxes, and it may well be entrepreneurs relief, but it will certainly be other taxes, will rise in the future, and therefore we need to be mindful. And I think the other thing to say with all of this is take advantage of the opportunity whilst it's there. So for business owners, paying a 10% tax on exit I'd say is great. Is something that you should try and take advantage of, and therefore whilst it's dropped to £1 million, certainly by looking at family ownership within the sector, it may well not necessarily have as big an impact on some sales as it could do, but certainly expect rises in taxation going forward, I'm afraid.
So I think as well as the significant change to entrepreneurs tax relief, one of the shocks was the immediacy with which the scheme was changed. Obviously, you don't have a crystal ball, but if this was to take place and if tax rises were to be rolled out, when do you think these will take place?
Who knows? Who knows? I think we need to get out the other side of where we are now, the lockdown and perhaps life returning to some form of normality, and then I would expect the changes to tax legislation. I can't see that being immediate, but just as the government changed the rules on entrepreneurial leave, I think the expectation will be as once we return to some form of normality, the changes will probably be quite swift thereafter.
Okay, thanks for that. Now, just before we switch into more of a legal side to the webinar, I'd just like to ask a couple of quick questions and do a poll. So your screen should show a poll in front of you that says, have you increased your number of residents as a result of the government's actions to create NHS bed capacity? If you could select one of the following, yes or no. Very quick little pulse check for the sector, really. We'll just keep this one open for another 3 seconds. 3, 2, 1. Thank you very much. And next question. It'll be interesting to see the answer to this. Do you expect to see profits for your care business increase during 2020? Okay. That's pretty overwhelming there. We're running about 80% no and 20% yes at present. Another 3 seconds. 3, 2, 1. Close that one off. And 24% said yes, 76% said no. And then finally, on an acquisitions basis, do you expect to acquire new healthcare businesses during the next 6 months? One answer is no. Yes, 1 additional business. Yes, 2 to 4 additional businesses. And yes, we're going to be quite greedy and we're going to acquire 5 or more businesses. Okay. So the answers are still coming in there. 3 seconds. 3, 2, 1. 60% answered no, 20% answered yes, they're looking to acquire 1 additional healthcare business, 17% at 2 to 4, and 3% want 5. So thank you very much for that. Now, switching to you, Matthew, from a legal aspect. In recent years, predominantly driven by the lawyers like yourself, the demand for information during the process of selling a business, a healthcare business, has steadily increased. Do you think that this demand for information will be greater when the lockdown ends and deal processes restart?
Thanks, Andrew. I suppose the bad news is yes, and I'm bound to say that as a lawyer, but it's only going to increase the information that's required. I mean, Mike and Murray have already sort of touched on the information that we're talking about. So certainly in terms of, you know, how this current outbreak has affected the home in question, in terms of your policies and procedures that you've got in place, and certainly when we come out the other side of that is what buyers are going to want to see. They're also going to want to see up-to-date management figures and also insurance policies that have been in place, whether there were any successful claims made or not, as the case may be. That at the moment is probably one of the biggest issues that's going around in terms of all sorts of things with the insurers and group action. So yeah, we're seeing it in terms of there being sort of inquiries relating purely to the COVID-19 outbreak, which are on top of your normal information request. So it's happening already. I think it will become standardised once we come the other side of this, because we're in the middle of it all at the moment. But yeah, we're certainly seeing a sort of increase in the amount of inquiries that are coming through.
Okay, and for many years now, purchase agreements have contained a force majeure clause, which, you know, sometimes is often overlooked as an event that will never happen. Do you believe that the current COVID-19 outbreak would be classed as force majeure, and will there be more attention paid to clauses moving forwards?
I think whether it is or it isn't, that's up for debate at the moment, and it's probably a big debate that's ongoing between insurance companies and their customers and legal counsel. I think you're right in terms of force majeure clauses are in a great deal of asset agreements and share agreements. They've always been in there. They do sometimes sort of get overlooked. A lot of deals are done on conditional exchange basis, so we have a deferred period in between exchange and completion. And obviously, if an event like this occurs, does that give an opportunity then for a contract to be rescinded or delayed, etc.? So it does become a real issue. Whether this is force majeure or not, force majeure generally was classified as being a one-off event, which was, beyond anybody's control, almost like a sort of act of God. This is a pandemic and it's an ongoing situation. It's already been ongoing for probably 3 or 4 months, and it will carry on for longer. So whether it will be classed as that, I don't know. But certainly there's going to be a lot more interest in the force majeure clauses, and I think the definition in the agreement of what exactly force majeure is defined as in your particular agreement, in compared with what's gone on in the past.
Okay, thanks for that, Matthew. So we've had a couple of questions that come in, which I'm going to come to you, Mike. So first question was, if we want to market our care home, what will be the best time to start, or when will be the best time to start this? And how do you expect the value of a business to be affected by this outbreak? So I guess in light of these questions, based on the current climate, is now actually a good time to sell?
Well, strangely, perhaps, yes, I would say it is. And I think it's evidently going to be on a case-by-case basis. But if you look at what we've seen, the first 2 weeks of lockdown, for example, well, this was I think a period of adjustment, whilst all firms were trying to sort out remote working and assess what impact they were likely to see. But if you look at the last 2 weeks particularly, we've seen an increasing number of inquiries, as I think people have adapted to circumstances, and I think that there's perhaps a recognition that the world is still turning. I mean, we've just in the last 7 days we've agreed terms on the sale of 3 businesses. On Tuesday, I was on a Zoom call with a Middle East consortium that are looking to invest heavily in healthcare acquisitions over the coming 12 months. So it was interesting looking at the results of that poll. In fact, I think that what I infer from activity over the last couple of weeks, 2 or 3 weeks, in fact, I think there's a dawning realization, with buyers that actually the healthcare market has been immensely resilient when, if you compare it to perhaps other sectors. And of course, homes have been locked down, but I alluded to it before in terms of norovirus outbreaks or flu. So this is a sector that is certainly being tested because COVID-19 is evidently far more serious. But the same principles have been applied. I think that there's been overwhelming support and increase in funding for social care, and I think that we'll see that continue. And a lot of businesses are actually seeing an uplift in occupancy level for service hours in the case of domiciliary care businesses, because hospitals are discharging patients, and of course these people need care. So the early signs for me are, with management accounts that we're having, that we're reviewing and are being sent to us, is that actually there's a direct link to profitability that's evident in those management figures. So if appetite is strong, I think potential target acquisitions are actually looking increasingly attractive as that EBITDA increases in line with that growing occupancy. Spending on social care is on the up, and I don't think it'll be lost on government. The groundswell in public demand. To see that continue. For me, I think that buyers are recognising this, and they are acting now. So it's always difficult to give a definitive answer, but I think right now, on the balance of evidence, I would say with the right advice from the right people, lots of caveats in there, but yeah, look, I think now is a good time to be selling.
Okay. A question that's just come in is, would you expect sale prices to fall?
Again, I think this is a case-by-case basis. You know, we've seen in the news that some care homes have been drastically hit by this, and you know, undoubtedly, where one's just recognizing. I think the first thing we've got to recognise is the massive impact, the human impact that this has had. From a buyer's perspective, their assessment has got to be based on profitability. It's a financial transaction and consideration. But I think in areas where a business is able to demonstrate that it has a robust infrastructure and the right outbreak plans, you know, they're containing these things, and where that is the case, then yeah, I have to say that I think those businesses stand a good chance of maintaining those levels. So I'm not seeing, although we've experienced, for example, in the last couple of weeks, you know, perhaps buyers demonstrating a nervousness. We are not seeing prices having to come down. In fact, as occupancy levels are increasing, EBITDA is increasing. So those that are in deals at the moment, you know, these acquisitions are looking increasingly profitable.
Okay, and a slightly unusual question. We don't currently have a website for our care home and have never needed one in the past due to recommendations and referrals. Would you say it is necessary to have a website when selling, which may show the home in a more professional light?
Well, I think the first thing that brings to mind for me is about getting the right advice from the right people. And the website is great from a perspective of attracting new residents and so on. But I think that this is where you need a good agent. And if that agent has got his finger on the pulse of who's out in the market, who's actively looking to acquire, and is able to give you that right exposure, the website isn't going to be the difference between selling and not selling. That's not to say that you know, good marketing doesn't give a potential buyer a warm fuzzy feeling, because you know, that's just one of the things that they don't have to then sort out. But particularly in the case of perhaps a group acquisition, the sale of a business, that business is going to be brought into the fold and will fall under new branding anyway. So I would say, look, if you're investing your money in anything at the moment, it wouldn't be a website, it would be on you know, a good outbreak plan, and it would be on getting a good agent to run a business for you.
Okay, thanks for that, Mike. Some good answers there. I think one of the topics at the moment, particularly one which will affect sort of domiciliary style businesses and sharing, it is linked to leases and what will be the changes which will happen and things you need to be aware of. So, Matt, what changes do you envisage as a result of COVID-19 which will impact on leases?
I think it's a topical thing at the moment, certainly in this sector and across others as well. So at the moment, the issue is leases are silent on any particular issue like this. It's a contractual arrangement between landlord and tenant. And it's of note as well for people who are owning freeholds and who are looking to just sell on a leasehold basis, how they look at negotiating the terms moving forward. The contract will just basically say that the tenant is due to pay the rent, irrespective of what's going on in terms of the trading performance of the business. What's happening with this pandemic, this is not a pandemic that affects the property at all. So the lease only normally covers issues that affect the property. So you always have your standard clauses in there about insured risks, uninsured risks. But that is all geared to an effect on the property. And if there's an effect on the property, the rent will abate for a given period of time. The issue here is there is no effect on the property. And at the moment, all the risk is with the tenant. They are still due to pay the rent, even though the business isn't operating possibly at full capacity. So what will probably happen is there will be some sort of moving of the goalpost to share that risk potentially between landlord and tenant. The landlord will look at it and say, I shouldn't be bearing all that risk. No doubt the tenant will say exactly the same. There may have to be some general approach, really, involving possibly the banks, the insurance companies, and other people to try and agree some sort of way forward for this type of event, because it hasn't really been dealt with before. And leases as they are at the moment would be pretty much silent on it. But moving forward, you are going to see, and we've already seen from tenant solicitors, clauses being put into leases to now try and shift the risk factor of this type of event.
Okay, thanks for that, Matt. A question that's come in, which I'll point towards you, Matthew. Do you think the sale process will take longer from agreement of heads of terms? If so, how much longer do you think is reasonable?
I don't think it will necessarily take longer. It will depend on the individual circumstances. So if the lending criteria has been met, if they're able to deal with the replies to these extra inquiries that we've been talking about earlier. But the process is the process.
Do you think the furlough position will complicate matters as more legal, more professional services have had to furlough staff? So we'll probably have more higher caseloads for the people that are working?
Yeah, possibly. And it depends how all that pans out, doesn't it? At what point you are in your sort of furlough process and where you are in terms of when you're expecting to sell the business. All of that, though, is going to have to be disclosed. So it is adding to the information that you're having to provide to a buyer as part of this process. Okay,
thanks for that. That concludes the webinar today. We've had a question about the recording. The recording of this will be shared later this afternoon and will be on the Redwoods Dowling Kerr LinkedIn page. So feel free to sort of view this. And I think just one final point, Murray, could you just remind everyone of the HMRC number, please?
Yeah, absolutely. The number is 0800 024 1222.
Okay, brilliant. Thanks very much for that, guys. Have a good day.